Jobs data comes in at 187,000. The market had anticipated 200,000. What does this mean? It means the jobs data is almost in a sweet spot. It wasn't hotter than expectations, but it wasn't so weak that the markets would freak out and say, oh my goodness, we're flying into a recession, we're going into a depression. It was really the perfect porridge, right? If you think about, is it too hot? Is it too cold? No. This number right here, 187,000, is just right for now. Now, the markets are rallying last I checked. In fact, I'm looking on the other screen over here at the futures. We are up on the S&P today. Not a huge amount considering the recent downside, but we are up. But I do want to just caution you, all right? This is where you're going to start to hear a little bit more of reality versus what you're going to hear from mainstream media. So this is what's concerning to me. So 187,000, perfect. Mwah, that's awesome. But what I don't like is, but wages still high. So what does that mean? Well, the Federal Reserve has said that they want to get inflation under control. If wages are still, if there's still pressure on wages, then that means inflation may still have some pressure. So while the jobs data on its surface was a great number, underneath the surface, it may not be quite as rosy. Now, having said that, the market seems to want to rally today. In the overnight, the futures were up because of Amazon's earnings. Even with Apple down on earnings, and we'll cover the charts on those in just a minute, it still seemed like the futures want to rally. It's Friday, middle of summer. Who the heck wants a down day? The markets right now are aiming for an up day. We'll see if we get it. The key on this, folks, this data, slightly weaker than expected, is bringing down yields. If we remember, one of the key catalysts for why the markets have been freaking out recently is that yields continue to go up. The 10-year broke above its recent high. That, again, has been problematic. Today, we're seeing a small pullback in yields with this slightly weaker jobs number, and that's helping markets rally.